All right, what's up, guys? Anthony here, Special Analysis. Welcome to the video. We are going to be talking about risk reward, right? At the end of the day, when you're a trader or you're an investor of your own money, somebody else's money, it really doesn't matter. You are the steward of that money, right? Like you have a responsibility, whether it be to yourself or to whoever's money you're trading, or even if it's a funded account, you have a responsibility as the trader to make responsible financial decisions. If you're not making financial responsible decisions with that risk reward ratio in the forefront of what it is you're doing, you're gambling. Come right out and say it. Right? It's going to piss a few people off. I don't care. All right? I am telling you this from experience that if your focus in your trade is not a calculated risk reward opportunity, then you're not trading, you're gambling. Okay? Our job as traders is asset management. All right? We have to manage our asset. Our asset that we're managing is our trading account. At all costs, preservation of that trading account is the only way you stay in this business. And that more often than not means sitting on your hands and staying out of the market. But when an opportunity is presented, you must take an account before you place that trade. What's your risk? What's your potential reward? Right? You should, on your chart, whether you're going to use predetermined levels, pivots, if you're going to do your own long-handed analysis, I don't care what you're going to do. But you should have a repeatable method of how you're going to personally approach the market as a trader. Right? It should be written down. It should be implemented with a great deal of consistency and discipline. So for my clients that trade using the Profit Pack, I apply predetermined levels to the screen if they choose to come trade alongside me. Why do I do that? For a couple reasons. Most of them are not proficient at long-handed analysis. Most traders are not. Okay? It's an art form. It takes many years to master. Okay? It's not the easiest thing. So usually we have to defer to something the computer populates for us. So I use a series of different pivots with different settings so that my traders, when they're with me, they can go, okay, we have an opportunity here. We're going to assess the risk and then, of course, assess the potential reward. Now, putting this into perspective, let me make something extraordinarily clear to you. If you're the trader that as soon as your account goes in the green, $200 or $300, that you automatically just take the money and you've risked $200 or $300 to get that, you are going to fail. You're going to fail. Okay? Because more often than not, you're probably going to be wrong, and that's okay. But you need big winners to absorb those small losers. If you're trying to take small winner after small winner, when those small losers come along, they're just going to eat your account back to zero. Okay? I hate to say that, unless you're extraordinarily accurate, and that comes with years and years of experience. You should be trading with at least what I call a 3R. The reward should be 3 times greater than the risk so that you can be wrong twice for every 3 trades you take and still be profitable in the big picture. So let's look at this setup here. We have a trend change to the long side here. You can see the profit band turns from gold to blue. We get that blue arrow. The market pushes up. Now, pushes up through a predetermined level. Okay, these are predetermined. This is not Anthony doing it for you. These are predetermined, populated on the screen. Now, the profit pack is a very simple tool to use. You must qualify the trade. So here's your trend change. Here's your correction through the profit band. Here's your trigger candle, right? So what was previously resistance was broken, retested, and should now be considered support. Additionally to that, you could see this period of indecision around the trend change, which should be also new support. So we have very basic demand right here, right, or support generated based on prior price action. We have a level here that is now proven to once be resistance, broken above, being retested, closed back above, should now be considered support. So we have two reasons to believe that this area should offer us a qualified buying opportunity. Does it guarantee it's going to work? No. But two reasons here to consider buying the NASDAQ. So our entry level comes in right here, right? Our risk is the candle itself. The profit pack does the job it's designed to do. It's designed to identify the first low in a new uptrend or the first high in a new downtrend. So this is the first new low through the profit band in an uptrend. You want to enter the market based on the close of this candle. You want to place your stop just a tick or two below it. Either this is right or wrong. It's that simple. Now, the speed of these candles and size of these candles can be completely adjustable. So if you're not comfortable taking a $17 risk or 70 tick risk, that's okay. You can make them smaller, right? You can adjust them however you want. This is the back-tested preferred setting. This number shouldn't matter to you. This number should. So where are we going to take our calculated profit? Right here at this next resistance level, R1. This is our target, right? This is our risk. This is our reward. Our R, risk reward, is 5.5 to 1. Meaning for the risk of 70 ticks, you're getting 5.5 times that as a reward if you're disciplined enough to hold the trade as you should because you took the risk based upon the reward. The R is the equation between the two. The reward is 385 ticks or $96.25 away from the entry. This is the first place you should be taking profit based on your R. You entered this trade with this risk based on this very particular reward. If the market bumps up and just takes a little pullback and you exit your trade, you have done yourself a great disservice. If you did it here, if you did it here, if you did it here, if you did it anywhere before here, you did your R a great disservice. And that means you are not disciplined enough to be a trader. I know that some of you aren't going to like that, and I'm sorry. But this, your R, your risk-reward ratio, should always be the forefront of everything you do. If you don't have a reward that more than 3 times outweighs your risk, especially as a newer trader, you're gambling and you're on your way to blowing up your account. Okay? This should not intimidate you if this is the reward and you're disciplined enough to hold to. Massive move, right? 385 ticks times $5 a tick is $1,925 per contract. Okay? With one contract should have paid your mortgage. Most people's mortgages. You got 2, you got 3, you got 5, you got 10 on here. Guys, this is an absolute beast of a run based on the R. Okay? This ratio of what your risk is compared to what your projected reward is based on a consistent approach to the market and a trade plan and a trader with discipline is the only way you're going to be a profitable trader. That's it. This is the secret. Understanding the R. This should be at least 3 to 1. The higher, the better. If you're not proficient at creating your own support and resistance and supply and demand and calculating all of those things through either prior highs and lows and channel structures and all that stuff, if you're not proficient at it, which most people aren't, and that's okay. Today's technology, every platform you use will populate pivots. Okay? They're calculated based on prior daily price, weekly price, monthly price, quarterly price, half-year price, annual price, all the way out to 10 years. You can have pivots calculated and populated on your screen. Guys, it is that simple. If this number doesn't make sense, then it is not the right trade. Plain and simple. Right? So whether you're using the profit pack, whether you're using traditional candlesticks, whether you're using a Renko chart, I don't care what your approach to the market is. I don't care what market you're trading. Stocks, futures, Forex, cryptocurrencies, none of that matters to me. None of that matters to me. What I have just stated in the last 12 minutes about the process of identifying, qualifying, and executing a trade applies to everything you do. If you do not understand this component, you're going to struggle. Okay? And guys, I share these videos with you and these insights and these lessons because they're lessons I had to learn the hard way. Nobody taught me that. Right? To figure all this shit out. And it sucked. So I'm trying to help somebody, whoever watches these videos, if they are helpful, if you do enjoy them, if you are learning something, then I just simply ask for your support. Okay? You don't have to buy anything from me. If you can like my video, if you could subscribe to my channel if you like my content, if you could leave a comment, guys, I'll respond to your comments, okay? Like, I'm not some corporate machine over here. I'm one single human being, simply trying to make a difference for fellow retail traders through my own failures. That's it. I was a shitty trader, right? And some days I have to force myself not to make bad choices because I created many bad habits because I didn't know how to learn or I didn't know what to learn. It took me a really long time. And my singular goal with this channel and my social media presence regarding trading is to simply help you and make your learning curve less painful. God bless, guys. I'll see you in the next video.